What is up, guys? Taiki here, and welcome to part 6 on why I think Canto is going to hit all-time highs, where every week I talk about Canto, and you ask yourself the question, why am I watching this guy? As you know, Canto continues to be dumped on my face. So right now the price of Canto sits at 25 cents, and it's since part 1, which was 6 weeks ago, it was at 13.9, so it is up like 2x, but I'm not really here for 2x. I think this is one of those higher conviction plays for me, or I'm willing to hold it 4 months. Maybe like even like multiple quarters to see the thesis play out. And of course, if in the middle I'm proven wrong, then I'll admit I'm wrong and whatnot. But the entire thesis lies in the fact that I've been in DeFi for a very long time, and as a natural optimist, I continuously look for new things in DeFi that can potentially, like what we can call innovation, that we can get excited about, where value accrues to the token, it creates some wealth effect. But as the past 2 years have taught us about DeFi, a lot of the products just aren't that great, and it's really hard for stablecoins to remain on chain, or it's hard to incentivize people to bridge stablecoins on chain when people can earn the 5% rate, like the risk-free rate off chain, 5.25, 5.5, and is it really worth farming on chain if you take into account the risk-adjusted yield? And that's why I'm really bullish tokenized treasuries or yield-bearing dollars, where you give your dollars to a particular DAO, right, like a DeFi project, and they'll convert your USDC into fiat, right? So that's part of the reason I think that the USDC market cap has continued to go down, because why hold USDC, right? USDC buys T-bills, and they don't pay you anything. So if you're gonna hold the stablecoin on chain, at least let's be paid for holding it, right? Otherwise, you're being diluted by the U.S. government, or all the money. You're basically giving money to Brian Armstrong and Jeremy Allaire. And I think it's a pretty neat narrative, right? Like vampire attacking USDC. USDC is a great business, okay? Like they take in dollars, buy T-bills, and they fleece people that don't, but they also offer a service, which is like a just trusted stablecoin. So yeah, it's a great business. But I do think that this space is ripe for disruption, and I'm very bullish any stablecoin issuers that can adopt a tokenized treasury strategy. When I started this series called DeFi Path to a Trillion, which talks about, okay, like how do we actually get to a trillion? Because the current DeFi TVL is 40 billion. Previous all-time high was roughly 200 billion. For DeFi to be a big industry, a big sector, which I believe it will be, we have to get to a trillion. And then we have to think critically, how are we going to get there? Is it going to be led by Ponzi's? Is it going to be led by pump and dumps? Meme coins? Probably not. It's going to be led by institutional adoption, and they're most likely going to be deploying capital into stablecoins instead of volatile assets that they don't really understand. And let's be real with ourselves. Even I don't fully understand these digital assets. They trade really weirdly. Sometimes meme coins pump. Sometimes fundamentals matter. Sometimes they don't matter. There's arguments to be made for both sides. But I try to be more of a fundamentalist. And this was 2 months ago. When was this? September 1st. And the TVL in RWA, this sector here, was 1.3 billion. This was underreported by roughly 3 billion because it wasn't counting Maker, which was at basically 3 billion. So you can say that, okay, 2 months ago, DeFi or RWA TVL was roughly 4.3, 4.4, plus or minus a few hundred million. It's not that important. But if you look at the category now, here, RWA is number 6 now, and now it's at 6 billion. So obviously, the simple question is, would you rather earn 0% yield on your stablecoins or 5% yield on stablecoins? I think people want 5%. Not everyone is going to convert their stablecoin into, a tokenized treasury because there are risks, liquidity risks. You're going to have to pay slippage to exit certain positions and whatnot. But I do expect RWAs to get into the top 5 in terms of TVL. To be honest, I think it'll hit top 3. CDP, I guess this double counts Maker. Bridges, with USDC's native bridge, I think there's going to be less liquidity in bridges. And DEXs, of course, DEXs lending liquid staking should scale. But I do think there's a reasonable chance for RWAs to, even be number 1. Okay, just because if crypto can attract stablecoin liquidity, then I think we've already won, because better liquidity, liquidity begets more liquidity. More liquidity means more wealth generated on chain, and more wealth generated on chain means that these financial instruments that we call DeFi prove to be more valuable. And Canto, it was you know, I mean, they announced their RWA strategy July this year, and then price went lower, and I'm like, okay, like they're gonna launch soon. Let's just buy and see how it goes. They launched 2 weeks ago, and I mean, if you look at the TVL, it's not that impressive. I mean, it went from 40 million to like 60 million, which sure, I mean that's great and dandy, but we definitely need to see 200 million. Okay, I mean we have to see all-time highs because Canto is an L1/L2 token. If TVL hits all-time highs, it's going to be a very reflexive asset, and the price should also follow. And the most important metric that I'm watching is stablecoin inflows. Right now, it's not really happening, but I'm less worried about it now because the reason there isn't like that much stablecoin liquidity is because the only way for Canto to really scale, and I think once it scales, it's gonna like just go off. It's gonna be slow adoption, and then once once Canto hits some inflection point, I think TVL is really gonna just go, and at that point is when Note basically trades at peg. And Note, which is the over-collateralized stablecoin, it's going to be backed by T-bills. It's in the process of converting. It's below peg, and the bull case for Canto is anyone can KYC into Canto and mint these these tokenized treasuries, which is yielding like somewhere around 5%. And right now, like I'm trying to go through the KYC process because I think it's. I can get like pretty decent yields on stablecoins if I do this. But like, let's say I do get KYC, right? And let's just assume that this is yielding 5%. I can, take USDC, convert it into this, borrow Note against it for let's say 4%, and then sell Note by USYC and kind of do the looping strategy. And as long as the borrow APR is lower than whatever this thing is yielding, it's a carry trade, right? You're just leveraging the risk-free rate, and there's very little risk of liquidations because your collateral is one of the most liquid assets in the entire world, and it really shouldn't move that much given that it's short-term treasuries, and it's really hard because basically like how the interest rate goes up is if Note is trading below peg, which is $1, the supply APR goes, or like both the supply APR and the borrow APR goes up every 6 hours. And I thought this was gonna get to like 4.5%, like in 2 weeks or like within 2 weeks, but it's still below 4. And I think next week it's gonna get to 4. And as the Note supply and borrow rate hits some equilibrium, I think Note is going to trade closer to peg because there's going to be more demand to hold Note, because Note is going to have more utility once it has once more applications launch and issue RWAs on the Canto blockchain. You can technically LP for cNOTE, which is kind of interesting. So you can mint or buy Note, lend it out, get cNOTE in return, LP with USDC, get 18%-ish paid out in Canto emissions. So I still think that from a farming perspective, these are one of the best farms in crypto. And if I am right on the thesis, then I think people will look back on like my part 1 video, right? And like these things were paying like 100 or like over 100%, and they're gonna be like, wow, like farming is not dead. Most farming is pretty dead, but like this farming alone is not dead. But anyways, one interesting development is this. So fortunately, there are 2 RWA issuers right now. There's Hashnote, which is like the USYC issuer, and then there's Fortunify. I'm trying to go through the KYC process for this just because I think like these guys. So Hashnote issues the USYC. They take like a 10% fee, which is kind of it's way too high, and I think they're taking like a lower fee, so I'm just gonna go to them, okay? And as there's more competition, the fee should converge closer to 0, and then it's gonna create like a better system for everybody. But like I'm just like patient. I created this meme because I was bored. Right now I'm unbothered, moisturized, happy in my lane, focused, flourishing. Just trying to see the big picture. I'm not really worried about the short-term volatility, and even when I first, or I don't know, like even here, right? Like if there was like a 30% correction, but I'm like, I don't really care. Okay, I'm just gonna hold. And right now it's like a 25% correction. Yeah, like 23% correction. Actually, you can't see it because my face. Let me move my face here. Yeah, like a 23% correction. Yeah, like I wish I sold the top and now I can rebuy the bottom or whatever. But like, I don't, I'm not really trading around my position. I think that, generally the markets are turning more bullish. Risk appetite is slowly returning to the markets, and I don't really want to, trade in and out of positions, get, I guess, like, get chopped up, no leverage, just buy and hold, have an idea, have a thesis, and monitor that thesis. So far it's good. Like more dollars are being converted from USDC into tokenized treasuries. That's a great trend. That's a great trend. I definitely need to see that. But for Canto specific narratives, so I mean, there are structural reasons on like why this isn't happening yet. But once the rate goes higher, once demand goes up, once more and more issuers start issuing RWAs, it's going to create more competition. It's going to allow for more optionality in terms of different types of things you can do. It's not going to just be tokenized treasuries. They're going to issue corporate credit and whatnot, and you can also lever that too, I believe. So I'm just like waiting on that to happen, and who knows? Like maybe I'm wrong, maybe I'm right. Only time will tell. To be honest, if you're watching this video, I don't know, like. I feel like I say the same thing over and over again, but there's like not much I can do, right? It's just like, okay, like I like Canto for these reasons. I bought, and I'm just sharing, or I'm just like sharing through these videos like how I think and the metrics I'm watching, and maybe it resonates, maybe it doesn't, but it also helps me be accountable for the videos I've made before, and not just like leave everyone hanging. So I mean, let's talk about Maker, because I was very, very bullish Maker, and if you look at like our research reports, I mean, like they're all just RWA related, right? So I mean, we have a free newsletter, you can like check out these reports, but we laid out the Maker thesis July 10th, and since July 10th, or roughly around that time, the Maker ETH ratio, okay, let's just take it here. Maker ETH ratio is up 40%. Okay, so Maker outperformed ETH. I still expected to get to parity, but obviously we're seeing a pretty deep correction in the Maker ETH ratio, which isn't great. That definitely doesn't feel good. And that one of the hardest things about crypto is maintaining conviction once something goes against you, because it's really easy to just be bullish when things pump and just join the hype train, and then when things go down, it's like, shoot, what the fuck is going on? But from a fundamental perspective, I still think Maker is one of the strongest assets in crypto. I understand that it's less exciting, and Maker makes $85 million of profits a year. It's a great business. Okay, they just buy a bunch of T-bills, and when they earn the risk-free rate, and whenever those T-bills mature, those interest payments flow on chain. And as long as the system surplus is below $50 million, right here, it's under by $1 million, Maker is going to buy back its own token. That's been the thesis. And I've mentioned that if the markets remain boring, so this was back in July and August, right? Or in September too. And I guess now, October, November. But anyways, as long as the markets remain choppy, boring, there's uncertainty, I expect Maker ETH to go up. But because it's a defensive asset, people like me, I guess, right? It's like we've outperformed Ether, so we can convert our Maker into more ETH. And it would make sense for people to take profits in the Maker into Ether if we think that we are entering more bullish market conditions, which isn't crazy given that Bitcoin is just pumping. Ether is lagging, but maybe there's some rotation, capital rotation happening away from defensive assets like Maker into higher risk assets. And that's why I kind of like this Maker Canto split in my portfolio, where Maker is defensive. It should outperform the markets, or it should outperform 98% coins. If the markets are just not doing that great, it's choppy, but it might underperform. But if the markets are pumping, which is one of the reasons for Maker to underperform, then I would expect Canto to act as market beta. So I am over invested, I suppose, in the RWA sector, but I think Maker and Canto, it satisfies or it has different purposes in terms of what it does to a portfolio. One is more higher risk, one is less risk, one has less downside, and one has more downside. But the other one has less upside, but like more. I mean, yeah, you kind of get the point. But my macro view is that the RWA sector is gonna, just hit top 5, top 4, top 3 eventually. And if I believe that to be the case, then I want to be allocated into the market leaders. And I think Maker and Canto are gonna eventually be that. I mean, Maker already is one. I'm just making a bet that Canto is eventually gonna get there. I could be wrong. I could be wrong. But like I said, just for me, I have an idea. There's so many other narratives, like AI coins, like other, it's like Solana, like Arbitrum, L2. I mean, yeah, there's like so many narratives. But the reality is it's really, really hard to catch these rotations in real time. And I've gotten to the point where, I'd rather just, sit in a well, like clothes off, clothes on, and just be like unbothered, moisturized, happy in my own lane, focused on flourishing. So that's kind of where I'm at. Only time will tell. I'm willing to be patient on this one, but I will say that if it's like February of next year and TVL is at 60 million, then I'm utterly wrecked. Okay, and I give permission. I give everyone permission to make fun of me. That's fine. But what I've been saying is by end of year, all-time highs in TVL. Okay, by end of year, or at least trajectory is hitting all-time highs, right? If at the end of the year it's at like 160, but like the chart is just going up, right? Then yeah, like that's fine. Okay. If at the end of the year TVL is like 100 and it's stagnant, then I'm gonna be more, I guess, nervous. And to be honest, like end of year timelines, I mean, that's just arbitrary. It's just kind of like the simple rule that I set for myself. But I don't see why it can't get there. More things are going to be shipped, I believe. Like Neo Finance November, right? Like maybe that's going to be a meme. But that's kind of where I'm at now. So I'll wrap up this video. Hopefully that was kind of useful. Maybe I'm like just saying the same thing over and over again. But I also do think that, yeah, I mean, these videos are mostly to hold myself accountable and to also just let I guess, where my conviction comes from, why I have a particular thesis. I'm not just throwing out tickers for the hell of it. It's more, okay, I have a macro thesis about yield-bearing stablecoins, yield-bearing dollars, and I'm just trying to pick the winners because I still think that it's a pretty new industry or a pretty new sector, ripe for disruption. It's still relatively contrarian, where people still call me dumb. I mean, I am dumb until proven otherwise, so I don't really blame those people. But hopefully it does play out. And identifying trends before they play out is probably like one of the better ways to I guess make money in crypto or like just investing in general. Of course, if we enter a euphoric bull market, then yeah, you can buy anything and it'll go up. But there's no guarantee that the next cycle is going to look like last cycle, and maybe the next cycle is going to be led by more boring but actually like actual value, right? Like actual value creation. Do people really care about a 14p ratio for Maker? Maybe not. Maybe not right now, but will they care eventually? I think so. And I expect this estimate of annual profits to hit or approach 100 million by end of year. And if Maker does well, I think things like Canto can also do well because it's higher beta to the markets, higher beta to Maker, and I'm like just front running the narrative around tokenized treasuries and RWAs because I think it's inevitable and I think it's needed for DeFi to succeed. Thank you for watching. Check out HFA Premium if you're interested in more additional content, but I'll see you next week. Bye-bye.